According to your most recent note, there is more M&A in the tech sector during a Trump administration. What areas and why is that? Yes, I believe that the M&A situation will be a Goldilocks situation. As you can see, regulation has been a major problem, and valuation hubris has also played a role. I believe that a tidal wave of M&A is about to occur, particularly in the areas of cybersecurity, infrastructure software, and artificial intelligence. It's similar to a tech prom, but nobody is actually asking anyone to dance. I've seen a lot of deals on both the private and public sides. Right now, I believe this is the beginning, and I believe that a Trump administration might lead to significant M&A. That's in the public marketplace, all right. I will come over to you, Al. As we indicated, you are an early-stage investor in Airbnb and Pinterest. Your exposure to the private markets is extensive. What does the election of President Trump, or President-elect Trump, I should say, signify for private market tech companies? We had previously heard that valuations were being pressured. Now that Trump is in the White House, does that change? Again, I believe it's incredibly encouraging for private enterprises generally. I think there are those in particular, notably the companies in the Elon Musk universe, like SpaceX, that will benefit greatly. It's just tremendously bullish. You know, we've seen what Elon Musk can do under what has essentially been a hostile White House. With a neutral or positive White House, I think it's going to be fantastic what we witness. This, in my opinion, is universal for private markets. You referred to it as the Musk economy, Alex, and you are aware that we were discussing it off-air. Elon Musk's corporate empire is depicted in this graphic. I mean, there are many different kinds of businesses. The Boring Company, SpaceX, Tesla, XI, and of course, X itself. What sort of valuation premium do you think we currently have under what appears to be a much friendlier administration, of which Elon Musk may be a part, when we look at these various companies? Yes, I believe that in certain ways, SpaceX and Tesla are so powerful that they contributed to Trump's election victory. I believe that with less regulation and a mindset that supports American construction, these potentially exceptional infrastructures will be deployed nationwide, but particularly in the redder states that supported him, much more quickly. So I'd like to return to you, Dan. Once more, your updated note states that you anticipate more mergers and acquisitions during the Trump administration. However, you were here in the studio with us on election night, and we were discussing this. Some of the stocks were rising. We've already discussed Tesla, but you also mentioned that you believe that other equities, such as Apple, Google, and Palantir, will benefit. Why is that? AI infrastructure is about to enter a golden age. Palantir will be prominently displayed. From the standpoint of the U.S. Department of Defense, I believe that everything Karp and the team are doing will result in significant spending there. With hyperscalers like Google, Amazon, and Microsoft, it's clear that a new era of AI infrastructure is coming. Regarding Apple, I believe Cupertino is at the forefront of this consumer AI revolution, notwithstanding some concerns about the tariffs imposed by China. That's why I think Trump's entry is significant for the tech industry. I believe that what Alex discussed, excellent, outstanding points, signals the start of this new tech bull market era. Therefore, the notion that there will be less regulation has given some sectors a boost. Do you expect tech to have that same kind of boost long term? The general consensus, I believe, is that Lina Khan will leave the FTC. Simply said, the regulatory landscape will change. For tech, Khan has been a nightmare, and I believe that her departure completely alters the landscape. In my opinion, the regulatory environment, which Alex discussed, will be considerably more conducive to transactions and mergers and acquisitions. As this AI revolution unfolds, I believe big tech will start to become a little more aggressive when it comes to M&A, particularly in the AI space. So Alex, to return to you and discuss some of these large private tech firms, I'm referring to SpaceX, which is valued at $210 billion, OpenAI, which is valued at over $150 billion, and Stripe, which is a sleeping giant with a valuation of over $65 billion. Would a Trump administration cause them to visit public markets more quickly? Does it alter the picture of valuation? What happens to these businesses that have pretended to be waiting to enter the public market? Yes, I do believe that the public markets will open sooner rather than later now that we know exactly what will happen in the White House. M&A markets are, in my opinion, open for business, as Dan notes. In addition to the IPOs that I believe are inevitable and just waiting to happen, we have many friends who are very eager to begin making purchases, which will help recycle the capital. Okay, so I get to enjoy myself. I get to tinker with the charts here, which is what you usually do. Starting with our first chart, we will examine the S&P, really the SPY, and take a look at the rally for the Trump trade. In a minute, we will demonstrate it. Here's what we need to keep an eye on, you say, a gap of sorts. What does this gap up here tell us? Watching the gaps from last week is, I believe, our theme for the week. Following Wednesday's extremely positive reaction, the market opened with a strong start, leaving these gaps in its wake. We constantly keep an eye on the gaps, since it would usually be a setback if the market, the SPY, or any individual security were to rapidly retreat within them. The gaps may provide hints about how long the upswing will last. For SPY, in particular, it surged about 5% last week, a fairly strong rise showing good positive follow-through straight away. So it has a fair chance of retaining that gap, but it really does need to hold it to preserve the breakout this week. All right, we are seeing a lot of enthusiasm, at least in the pre-market right now, so we'll have to wait and see if the technicals take us in the right path. I'm going to clear the charts once more, but I want to go to something else now. I see why you enjoy doing this, Katie. It's a lot of fun. Now let's look at the VIX chart. From here and then from around here, we will examine overbought and oversold conditions. Therefore, I think the overbought line is at the top and the oversold line is at the bottom. What does that teach us? What do these charts tell us? It's fascinating. A very distinct trading range has emerged on the VIX, with resistance around at 22 to 23 and support at about 15. We would suggest that the high volatility cycle that started in July is still in place within that range. On the other hand, it would indicate that the market will be able to continue rising if the 15 area, the lower limit of that range, were breached more forcefully. Naturally, that would indicate that a cycle of decreasing volatility has resumed. So with an oversold scenario in the VIX around that support, you would expect to see some consolidation, meaning it starts to go sideways, and finally experiences an oversold bounce. Naturally, you could then extrapolate that to the S&P 500, with which it has an inverse relationship, and anticipate a consolidation and decline in the S&P. The only question is how dramatic that will be. Okay, Katie, let's move on to the newest Dow component, which is another stock. Every trader I speak with either owns it or frequently discusses it. Here, we were practically CNBC Nvidia. Of course, I'm referring to Nvidia. I'll display the chart right here. The 200-day moving average, the goldish line, the 100-day moving average, the purple line, and a region of resistance are all visible here. What can you infer about this trade and this stock from that? Thus, Nvidia is referred to as testing resistant. A breakout is still pending confirmation this week in our study because the 141 level was convincingly cleared last week on a 9% gain. If Nvidia closes above that level on Friday, it would validate the breakout, which is a positive sign. The measured move price target from that breakout would be roughly 157. This is more of an intermediate-term goal, albeit it may be a little conservative in the long run. We would wait for that confirmation for two reasons. First, we want to monitor the gap that Nvidia, like everything else, has this week. Second, our DeMark indicators are expected to show a short-term counter-trend signal today. Additionally, there is currently a respectable spread to support, with Nvidia's spread being about 130. So we really want to see that confirmation to feel like we can then be more constructive on the upside follow-through for Nvidia. Let me know.